Morning, Steve Free in Chicago with the morning grain comments. Well, markets were closed overnight in the grains, and we opened up at 8:30. The calls are about maybe 1 cent better for corn, beans, and wheat. The bean market is near season highs on optimism about a trade deal with U.S. and China. Corn market is near season lows with poor export demand and questions on whether corn and corn byproducts will be used in the part of the deal, and if China will actually come in and buy them. And wheat is near the season highs, partly due to some changes in the way the Russians may price their export wheat, and also the VSRs here in Chicago and some of the squeezes that happened in the December wheat contract here in Chicago, offering some support. All this in the background, number one, is that many people feel that this January 10th report by the USDA will be a dud. U.S. won't make much changes in acres or yields, and won't make a lot of changes as far as U.S. export demand based on a phase one deal, and that they may punt down the road as far as South American crops are concerned. But the weather over the last 10 days has improved, especially in Argentina, and their crop sizes, especially Brazil, is probably going to get bigger down the road. That suggests that in 2020, unless there's some weather problems, there's going to be a lot of competition for U.S. exports, either from South America or from the Black Sea. And we'll just kind of see how all that plays out with China buying U.S. Will non-China buyers other origins, and will other origins prices remain below U.S. prices and make that competitive? If we have big crops in 2020, at some point in time, let's say maybe April 1st, prices could make a top in the grains and could move lower depending upon the weather. We continue to see the drop in open interest in the Jan soybean, meal, and oil contracts as we close to first notice day. We did note out of China some reports that November China bean imports from U.S. Was quite a bit higher than what we've seen of late. We also noted that they're trying to crack down on illegal shipments of pork across the nation that may cause a spread of the African swine fever. Again, one of the stories of 2019 was the big drop in Chinese hog production because of the spread of African swine fever. And then we also noted that the Chinese did mention that they would potentially start buying U.S. goods, but that in the corn areas, they could see some problems with pests spreading more and affecting their corn crop in 2020 more than it did in 2019. So we'll be watching the Chinese economy and to see how, if it bounces back. They had another stimulus package last week, and all the indications is that the Chinese economy is slowing. We'll watch the U.S. economy. 6 months ago, people were talking about a recession this year, and it didn't happen, and we had growth. And so in 2020, people still feel that we could see a stronger U.S. economy as long as the Fed keeps interest rates low. So a lot to think about as we head into 2020. It's going to be a big trade year, hopefully. It'll be a big weather year, hopefully. And hopefully we'll kind of get out of the doldrums of low volume trade in the grains. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.